The financial world often buzzes with news of major stock transactions. Lately, many of the world's wealthiest individuals, the billionaires, have been notably selling off significant portions of their stock holdings. This trend naturally sparks curiosity and raises an important question for many investors. Why exactly are these titans of industry making such substantial moves in the market right now? Let's delve into the complex array of reasons behind these high-profile stock divestitures. Billionaires understand the paramount importance of not having all their eggs in one basket. Even with vast fortunes, concentrating wealth in a single company or asset class can present considerable risks. Selling stocks often serves as a strategic move to diversify their portfolios across various industries and asset types. This helps to mitigate potential losses if one particular sector faces headwinds or underperforms expectations. It's a fundamental principle of wealth management applied on a grand scale. Despite their immense wealth, billionaires also frequently require liquid capital for various critical purposes. This can range from funding ambitious new ventures or startups to supporting significant philanthropic initiatives. Large personal expenses, such as substantial real estate purchases or private investments, also necessitate considerable cash flow. Selling stocks provides the necessary funds without resorting to loans or other forms of debt financing. It ensures they have immediate access to cash for their diverse personal and business needs. Billionaires are often privy to extensive market analysis and expert insights, which profoundly influence their strategic decisions. If they anticipate a market downturn or believe certain stocks are significantly overvalued, they might sell to lock in accumulated profits. Conversely, they could be taking gains after a sustained bullish run, ensuring their paper wealth translates into real, tangible capital. This calculated profit-taking helps secure their returns before any potential market correction or revaluation occurs. Their actions can sometimes signal a cautious outlook on future market performance. Tax considerations play a crucial role in the timing and volume of stock sales for the ultra-rich. Strategic selling can be orchestrated to minimize capital gains taxes, especially towards year-end or in anticipation of new tax policy changes. They might employ tax loss harvesting, selling losing investments to offset gains before offloading profitable stocks. Understanding complex tax codes allows them to optimize their financial outcomes significantly. This careful planning ensures they retain more of their wealth after divestment. Insiders, including company founders and executives, face stringent regulations regarding their stock transactions. Rules like SEC Rule 144 dictate precisely when and how affiliates can sell restricted or controlled securities. These sales are often pre-scheduled or occur within specific trading windows to meticulously avoid any accusations of insider trading. Billionaires must strictly adhere to these compliance frameworks to maintain legal integrity and transparency. Such regulations ensure fair markets and prevent individuals from exploiting non-public information. A billionaire's decision to sell stocks might also stem from factors specific to the companies they founded or heavily invested in. This could include a change in company strategy, a desire to step back from an active role, or the expiration of lock-up periods following an initial public offering. Sometimes, selling reflects a reevaluation of the company's long-term prospects or its market position. These internal corporate shifts can significantly influence an individual's personal investment strategy. It's often a sign of evolving relationships with their primary business interests. Rising interest rates are a significant economic factor that can impact stock valuations and investor behavior. Higher rates increase the cost of borrowing for companies, potentially slowing growth and reducing overall profitability. This can lead billionaires to believe that future returns from equities may diminish, prompting them to reduce their exposure. Furthermore, higher rates make bonds and other fixed-income investments more comparatively attractive, providing an alternative for wealth preservation. They might shift capital to less volatile assets, offering better risk-adjusted returns in a rising rate environment. Persistent high inflation erodes the purchasing power of money and can create considerable uncertainty throughout the economy. Billionaires might sell stocks if they anticipate that inflation will negatively impact corporate earnings and future growth prospects. Stocks of companies unable to effectively pass on increased costs to consumers are particularly vulnerable during inflationary periods. In response, They might seek assets traditionally seen as strong inflation hedges, such as real estate or commodities. This strategic move aims to protect their vast wealth from the corrosive effects of declining currency value. Global political and economic uncertainties can significantly influence investment decisions for the ultra-rich. Events like international conflicts, trade wars, or major policy shifts in key countries create widespread market volatility and unpredictability. Billionaires may decide to reduce their exposure to equities in highly uncertain times to meticulously protect their portfolios. They might seek safer havens for their capital, opting for less correlated or more stable investments. Geopolitical risk management is a critical component of preserving vast fortunes in an interconnected world. There's a growing trend among some billionaires to strategically shift capital from public stock markets to private investments. Private equity, venture capital, and direct investments in private companies offer different risk-reward profiles and often less public scrutiny. These private ventures can provide greater control, longer investment horizons, and potentially higher returns for those with sufficient capital and expertise. Selling public stocks provides the necessary capital to deploy into these private market opportunities. It represents a strategic reallocation towards less liquid, but potentially more lucrative, investment avenues. As individuals age, estate planning becomes an increasingly important aspect of wealth management for billionaires. Selling stocks can be part of a broader strategy to simplify their estates or facilitate the efficient transfer of wealth to heirs. This might involve distributing shares or converting illiquid stock holdings into more manageable cash assets. Such moves ensure a smoother transition of wealth and minimize potential tax burdens for future generations. It's a proactive step to manage their legacy and provide for their family's financial future. For some billionaires, especially those who have already accumulated significant wealth, the primary focus shifts from aggressive growth to prudent wealth preservation. As they approach retirement or simply desire a less volatile financial profile, they may actively reduce their exposure to riskier assets like stocks. This can be driven by a desire for a more predictable income stream or to fund long-term philanthropic goals. It reflects a personal evolution in their financial objectives, prioritizing stability over maximum capital appreciation. Their changing lifestyle needs and risk tolerance play a significant role in these investment adjustments. It is crucial to understand that not all stock sales by billionaires necessarily signal a negative outlook on the economy or specific companies. Sometimes, selling one stock simply frees up capital for a more promising opportunity elsewhere in their diverse portfolios. Their vast holdings mean even small percentage sales can amount to billions of dollars, making headlines despite being routine portfolio adjustments. Therefore, interpreting these sales requires a nuanced perspective, looking beyond the initial headlines to the underlying reasons. It's a complex interplay of personal, corporate, and macroeconomic factors. The decision for billionaires to sell stocks is rarely singular, but rather a confluence of strategic financial, personal, and broader market factors. From diversification and tax planning to responding to economic indicators and geopolitical events, their motivations are undeniably multifaceted. Understanding these reasons offers valuable insights into the broader financial landscape and the sophisticated world of ultra-high net worth investing. While their actions can certainly influence markets, it's essential for all investors to consider the full context before drawing definitive conclusions. Ultimately, these sales reflect careful calculations aimed at maximizing wealth preservation, optimizing returns, and managing risk in an ever-changing global economy.